Markets are crashing. Sell everything that you have, right? Actually, what we do have right now, Joe, as you would know, you're a professional investor like myself, also competing in the US Investing Championship. We have a bearish trend going on right now. We have the 10 EMA under the 20 EMA, prices under the 50 EMA. And what I see is absolutely zero. There is nowhere to hide. It is going down as fast as possible. So whatever stock you're in, except for SoFi, don't ever sell your SoFi shares. Any other stock, it's going to zero. Sell everything. Put the money under your mattresses, right? Panic. Actually, I have a slide. Warren Buffett. Oh, no, there's a preview of the new rules. Don't look at those real quick. A virtue gaze. Nobody look at that. Warren Buffett has this quote: freak out, freak the blank out, and panic sell everything. It is blanking over. That is exactly where we are today. We are crashing down to levels not seen since yesterday. And levels not seen since an entire week ago. Oh my gosh. Levels not seen since 1 week ago. Yeah, there you go, Joe. Panic, freak out, be terrified, sell everything. It's over. Yeah,
I think the reality is, if you are panicking right now, it means you have not learned risk management and you have not learned position sizing. And you're putting yourself at so much risk that it's very uncomfortable for you to be a trader, and you may not succeed.
You're not going to last long, that's for sure. And Joe, I got a secret to tell you. Don't tell anybody though. It's just between you and me. I have no idea why the market's crashing. Is what it is. It's going down. That's fine, right? I can tell you direction. I can't tell you magnitude, and I can't tell you duration. But I can tell you one thing: I'm going to get the heck out of Dodge when this kind of stuff happens.
I'll tell you what. I'm already out of the way. Outlier told me to get out of the way many, many days ago.
That's
so
right.
I'm sitting in treasury bonds, making interest. And when the market turns back and we have a bullish trend, that's when I'm going to pounce.
Yeah, exactly. And Joe, if somebody's watching this and they aren't a professional investor like we are, right? Let's give them a crash course on the Outlier trend template. And maybe, just maybe, they will also start to see how it works, because let's go look at a couple stocks, right? There's a stock out there that you probably would never assume would go down. I'm not talking about SoFi. That stock won't ever go down. But maybe another stock that you might have heard of, Microsoft. If you can believe this, Microsoft is market cycling like no one's business. This is in a big, nasty, scary stage 4 downtrend. And I bet you there are a lot of old blue-haired ladies and a lot of old guys with dentures who are sitting on this, watching it go down day after day after day. And it's gone down since the sell signal that came right here. Since that point, it has gone down 22%. And these old folks, right, they're looking at this and they're like, my retirement just went down 22%. What am I going to do?
Yeah.
Remember. Go ahead, Joe. Go ahead. Before I tell you what to remember.
It takes far too long to make that 20% back. You have to get out when the signal says get out, when your plan says get out.
Joe, you don't make 22% back. To get back to that level, you actually have to make 29% back.
Yeah.
That's the way the math works. It now has to go up 29% to get back to that level. Isn't that crazy? Ooh, yikes.
Tough. At 8% a year, that's a lot of years.
Yeah. But listen, Joe, right? It went up over here. So of course, with my hindsight bias, my recency bias, when it goes up like this, it can only go up, right? You got to buy the dip, because if it dips, that means it's just going to go right back up, right? And you can double up. Joe, if you doubled up on the way down here, then it'll take you half as long to get back to break even, right?
No. You don't want a DCA. You don't want to buy on the way down. You know what you could do, Chris? You could wait until the trend turns around. If you're somebody that's waiting for the price to go up, just follow the Outlier trend template, wait for the trend to go up in the direction, in the direction that you want it to go.
Exactly. The 10 going over the 20, price going over the 50. Those are EMAs. And in fact, let's pop into Outlier real quick and let's take a look at Microsoft, because surely we can find the answer to Inkari's question of, hey, when did that sell signal come exactly? Let's just double check that real quick. Microsoft. And oh my goodness, Joe, that sell signal came right at November 5th, which is what I have shown on here. That sell signal came and it went down like gangbusters ever since that time. Now, I would imagine that if you had spent 82 cents a day, you would have definitely made up for that in this big, nasty, scary down move, right? That's literally how much Outlier costs, right? For 82 cents a day, you would have known, get out of the way of Microsoft falling like this.
Here's a good comment, though. Just think of the discount you're getting. Yes, if you're an outlier and you're sitting in cash or sitting in SCOV or sitting in about anything that's not Microsoft, when it starts going back up, you can buy it at a discount.
You're totally right. You're totally right. And of course, remember, and this is what I was going to say earlier, is that all stocks are bad. Even Microsoft. Even Microsoft is a bad stock because they all carry market risk. I don't want market risk. I want to eliminate as much risk as possible every single day. Unfortunately, when you put on a trade, initially you set how much risk you're willing to take. And by rolling, which is what we teach here at Outlier, you can actually keep your trade on, take partial profits all the way up without reducing your trading size. Ninja hack right there. Without reducing your trading size to the point where you have no risk in the trade, you have guaranteed profits, and you can just let that bad boy run. Let that bad boy run. The market's fickle, but I've got 3/4, 2 pennies, and 1 nickel. Holy moly, that's really good. Somebody add that to our merch channel because I love that. Well done, Mike.
That's very cool.
That is very, very cool. So like what Joe was saying earlier, right? You want to be buying on the way up. Joe? Joe and I were clicking the same thing. You want to be buying on the way up and not on the way down, right? Don't buy the dip because you don't know how far it's going to dip, okay? Because there were people buying Microsoft dip all the way down. It's going to go back up. You don't know how far it's going to dip. You want to buy the rip because you don't know how high it's going to rip. You don't know how high it's going to rip. I mean, if you are logical brained enough to say, I don't know how far down it's going to go, so I don't want to buy it all the way down, you are logical brain to understand you don't know how high it's going to go. So I want to be buying it while it's going higher, right? And Winger's YouTube says, I just closed my last remaining Plan M trade, part of Outlier, on BHP. Let's go to BHP real quick. BHP. Oh, that's a good one. On BHP, for 118% gain, and it pays for 97 years of Outlier. That definitely deserves a golf clap. That definitely deserves a golf clap. That's what we're here to do, to help you save time, make money, and start winning with less risk using brand new term as of today, the trading intelligence platform known as Outlier. Y'all are like loving that, which is really cool. All right, I love being able to define Outlier as a trading intelligence platform. There is no other trading intelligence platform. We are one of one. So this is super cool. Okay. So Joe, one thing that had been bothering me for a minute, not just the fact that this is so weird. I didn't realize that Warren Buffett grew this big yellow thing next to his ear. I wonder how that could have happened. I don't know. I have no idea how that could have happened, but that's just so weird to me. I never saw that before. I want to work on some new rules. I want to work on some new rules in the Outlier Trading Room US Investing Championship invitation only live stream. Now, for those of you who don't know how Outlier works, it monitors how investors are reacting to changing market conditions, news, price movements, and the economy. It determines if investors are acting irrationally fearful or greedy and by how much. It gives you buy and sell signals when those irrational behaviors reach an extreme, and that allows you to get in or out of the stock before the Outlier move happens. Remember Microsoft? Case in point, when or before those Outlier moves happen. That's the point. That's the point. Did its job. Okay. Let's keep going here. This is how we help you save time, make money, start winning with less risk. So go ahead and subscribe. So we have 3 different plans. Plan M is our most aggressive plan. I have been wanting to make some rule adjustments to Plan M with my friend Cam Golden, who is a huge help in all of this. Plan ETF, we did not get into this week. We got really close. I don't know if you remember this, Joe, but we got really, really, really close a couple days ago. We did not get into Plan ETF because the SPY is now fighting with an order block right here. A 30-day-old order block kept us from getting in. So I didn't have any market risk as the market started to pull back because I am in plan, sit in cash and don't F up your portfolio. It is not sit in cash and complain. It's not sit in cash and cry about it. It's not sit in cash and think about all the trades you could be into and you've got all the FOMO. It's sit in cash and don't F up your account, because do you know how easy it is to be like, I got nothing else to do. I got money in my pocket. Let me do something, right? My dad would always tell me when I was a kid, you give me a couple dollars or whatever, and like, how fast can I spend it? He's like, you got a hole, you burn a hole in your pocket or something, right? Is that money burn a hole in your pocket? People treat their trading accounts exactly the same way. I got money, I got to do something with it. You can sit in SGov, which earns right now around 4.3% APY. So basically, you're getting paid to not take market risk. How's that sound?
Yep. And we've heard from professional traders who will use this at downtime to work on new plans, or like you're showing us, to backtest the plan that they have on right now to make it better, to have a higher expectancy. So it's not that you don't have anything to do, it's that you may choose not to do the things that are going to help you succeed.
Exactly. You're going to, more than likely, because most people do this. Normal people do this. We're not normal, right? If you want to be a professional investor, you cannot do what normal people do. Just like if you want to be a professional basketball player, Joe, if you want to be out there shooting hoops with LeBron, you can't be normal. I mean, let's be realistic here. But people want to consider themselves a normal person and then be excellent in the market. Consider themselves a normal person and have absolutely market dominating returns. You can't do that. You get to pick. Be normal, get normal returns, or be an outlier and get outlier returns. That was a decent sales pitch. Let's keep going though, because what I want to do, since I'm planning to sit in cash and don't F up, and I'm not going to F up my portfolio, I'm going to stay in cash. I want to talk about our new trading rules. How's that sound?
Everybody excited about trading rules? Are you saying you've been busy, Chris?
I have been busy with my friend Cam Golding. Cam is super smart. I had an opportunity to work with him a couple times. He actually lives in Spain. He went to Texas Tech University, and he is an entrepreneur building his own cosmetics brand over there. So he's currently in the process of the cosmetics line, where it's going through like whatever their FDA testing is over there. And so he had some time on his hands, and he's like, let's work on this together. So I really appreciate Cam. The premise of these rules and why we started to work on them was, the question became, how many days should we wait to find out if it's going to work? Now, one of my mentors, Mark Minervini, who will be here next week, if you can believe that, which is super, super exciting. You all who are watching live get to actually talk to Mark Minervini. Maybe you get to ask him some questions. One of his things is you don't want to have dead money. Right? If the market isn't working for you, if your stock's not working for you, you don't have to hold on to it. You can just get out of the way, right? Move on to something else. And so that was the theory that kicked this off. But then a lot more came into it. Because we talked about bid and ask spreads. We talked about extrinsic value. We talked about liquidity. We talked, and thanks to Lex, we actually learned quite a lot about different liquidity strikes and how the market makers can basically absorb whatever you throw at them. It might cost you more, but they can throw whatever they want. And we have seen that, right, Joe? We've actually seen open interest in a couple of 100 maybe, and then we'll throw 10,000 contracts at it. It worked.
Yeah.
Right. It worked. So that's really exciting. So a lot of wheels have been turned, and I wanted to show some of the benefits of these new rules before talking about what the rules actually are. First, some of the pros: more liquidity, just overall more liquidity. So easier to get in, easier to get out. Another pro: easier to roll down or roll closer to the money. I really should say roll up, and easier to roll out as well. Now we're talking. Less confusion, right? Having less confusion always makes a trader better because they have more laser focus. Less confusion on which expiration to choose. How about even more? Less daily theta decay. Now we're talking. See, Joe, like, we had a point, we had a plan. All of this was the plan, right? And I'll get to this in a little bit, but there were some drawbacks, right? The options are going to cost a little bit more, but when we put them in our trade calculator, which I'll show you in a little bit, it's not much more, maybe like 3 to 6% more overall, which is really not all that much. There's a potential for less total trades because of the higher capital usage. So for example, if you put on 6 trades and each one of them was 6% more than it would be previously, that would, be about 36% more capital being used. It was a fact. Okay. But I believe the trade-offs outweigh the cons here. So let's talk about what these new rules. Of course it was recorded. It's in the Outlier I don't know if you know this, but if you go to the YouTube channel that you're watching this on right now and you go over to the playlist section and you go to the Outlier University Bravo playlist, specifically the Bravo playlist, you'll see that interview with Lex right here. Man, this had to be one of the highest engagement, most complimented, I should say, most complimented YouTube video that we ever got, because Lex was dropping knowledge bombs all day. And so that'll get you, I see you, Justin, that'll get you a pro tip. Here's your pro tip right there. Here's your pro tip. We need a pro tip. Dude, a trading intelligence platform. We need a pro tip. Dude, it just,
there you go.
Everything clicks together when it's supposed to. So, all right. So after that meeting with Lex, here are the new rules we came up with. And I got maths. You ready for maths? We're about to get our nerd on. Somebody said that earlier and I loved it. We're about to get our nerd on. Okay, first, only trading monthly expirations. Okay, so let's go into an options chain. This is Coca-Cola. And when there are all kinds of expirations you could choose from. We're going to shift away from weeklies, trying to search for that 21-day, out to monthlies. Now, let's review why. Look at the liquidity here. Look at the liquidity here. Look at the liquidity here. And then look at the liquidity here. Wow. Right? We're talking orders of magnitude. Potentially 10, 20 times more liquidity. That's what you want. It's exactly what you want. Okay, so that's good. Monthly expirations, at least 30 days from opening. So we're going to go back to regular expirations only. Okay, so regular expirations only are the monthlies. So again, more liquidity overall. Easier to roll down and out. Now, I don't know if you guys remember this, but Charlotte actually suggested this a while ago in Bravo class. She said, when I'm looking to put on trades, I want to see not only does my strike have liquidity, but the strikes below it, so I can roll to those at some point in the future. And I was like, Charlotte, that's actually really genius. It's actually super genius. So Charlotte is 100% right on that. And that is actually something I'm pulling into my plan because of her suggestion. Let's keep going here. So only trading monthlies and only 30 plus days to expiration. Let's talk about why only 30 plus days to expiration. Here comes the math.
And Chris, for our new customers, I'm sure you are feeling completely lost. You have no idea what Chris is talking about. So it's okay. You got a lot to learn, right? It's a whole new language. Go to Outlier Trading with Joe on YouTube. You're going to find videos on how to become an outlier and what all these terms mean. But stick with us. It's worth it.
Joe, I do forget sometimes, and forgive me for this, but I've been trading for 17 years and all of this just flows out like stream of consciousnness, right? So I apologize because I understand that this can be overwhelming for somebody who's newer into the markets. But keep in mind, right? I really do try my very best to explain it all. But if you guys have questions, I'll do my very best to explain those questions. And Patrick, it's his 1 year Outlier-versary today. Congratulations, Patrick. Thank you so much for being a part of this crew for a year. Let me ask you this, Patrick. Was it worth 82 cents a day? Was it worth 82 cents a day? Oh, Senior Wahoo Art, it's his 1 year anniversary on Saturday. It didn't blow up his account, and he's up 34% this year.
Yeah.
I don't know. Awesome. You tell me, was that worth 82 cents a day? I don't know. You tell me. I mean, I'm not saying it. You're saying it. Dude, that is awesome. That is awesome. Awesome. Patrick says it's worth 1,000%. Well done, my friend. Okay. So let's break this down. Imagine a theoretical option that costs $10. Okay. So equivalent to saying, you know, I'm looking at an option and I'm going to go for one. Let's just say this one here. Let's say it's roughly $10. Okay. Now, I like to do 20% of extrinsic and 80% intrinsic. So that's how that would break down. $2 extrinsic, $8 intrinsic. Now, let's say that we took a 17-day contract. Okay. I'm sorry. Let me rephrase that. A 21-day contract where we started. The average trading days in our plan is 17 days. Where did I get that from? Linked down below is my exact trading plan. This document you're looking at right now is linked down below. There is no paywall. There is no nothing. You click it, you're here, right? You have this data at your fingertips as you're watching this right now. The average trade duration is 17.46 days. We'll just round it to 17 days. So if I have a 21-day contract, that means that each day, 9.52% of the extrinsic decays per day. You're taking 2 divided by 21. The tracking, Joe, you following there?
Yep.
9% of the extrinsic will decay per day. The total cost of this would be roughly 10 cents out of the cost of the option per day. So the total option cost is only, let's call it roughly 1% per day. It decreases over time. Okay. So 1% of the total option cost decays every single day on a 21-day contract. Everybody understand? Everything else held equal. Okay. Now, let's say that we have a 17 average day trade. Okay. That would mean during this time, 16.19% of the total option cost would decay, which is 80% of this value. This is super high level. And if you don't understand, I completely understand where you're coming from. Let me try and explain as best I can, okay? The total extrinsic value is 20%. If we have a 21-day contract, it will go to zero. This will eventually go to zero at the end of 21 days. If I'm holding my 21-day contract for 17, that means 80% of it will decay. Throw a thumbs up in the chat if you're tracking. Throw a thumbs up in the chat if you're tracking. Justin's tracking so far. Very cool. Okay. Now, that's a lot. Wouldn't you say, Joe? Right? Yeah. But we're trying to minimize risk here. And to see that 81% of our option would decay over time, that's not cool. I don't like that idea at all. What if
let's try to minimize that.
What if we could reduce risk, Joe?
Ooh.
What if we could reduce risk, Joe?
Do tell.
How about instead of basically maxing out how much extrinsic value will decay, how about we just make it longer? How about we go from the 21-day to 30-day? We did not change the average days per trade. All we did was change the expiration date, right? So instead of the closest one, we're going to one further out. So you could even say 35 days here. Okay, we'll use 35 because that's what it is, 35. Now that's 5% of the extrinsic will decay per day at a cost of 6 cents on the total option contract, which means that the total option contract decays by 0.57% per day. Now, if we still have 17 days, hang on, Joe, save that lurk affiliate comment. I want to come back to that. If we still have 17 days in the trade, that means the average decay per trade, total decay on average per trade, that should say per day, I think. No, per trade, because it's this times this, yeah. Yeah, got it, okay. So the total decay per trade is 9%, which is only half of the extrinsic. So let's do this one more time. 21 days, 80% of this will decay. If we go to 35 days, less than half of it will decay. That is a big, big, big difference. Huge difference.
Yes, it is. Huge difference, yeah.
Huge difference. So let's say if we had a 17-day contract and it expires 17 days later on our average trade, 100% of the extrinsic gone. That's the total decay for the entire trade. 21 days, 16% of the total trade, 80% of the extrinsic portion. 35 days, 9% of the total trade, less than half of the total extrinsic. I saw this comment from Lurkophiliac. He said, 1 year ago, this would all be very confusing and bewildering. Today, it all makes sense, and I could explain it to someone else. I truly appreciate how much I've learned from Chris over last year. I am so stoked to hear that. That is a great, great comment. Thank you for that. Less theta equals more better. Yes, exactly. Less theta equals more better. But to answer the original question, how many days should we hold on to something before we decide it's a dud? Because really, that was our original question. Well, if we can break down the total option cost per day at 57 basis points, and let's say we have 5 days, that means the cost per day, 5.87 times 5, or 0.57 times 5 gets you 2.86. So that is your theoretical break even after X days. And of course, this is linked down below as well. You can have a copy of it. If you already have a copy, just go and make a new one. Make a copy of it now, and then you'll have all this. The theoretical break even after X number of days to offset the theta. And this is on the price of the option, not the stock. So the option price needs to go 2.86%, which is nothing. Absolutely nothing. Nothing at all. But let's say we've got a 35-day trade and it's gone 17 days, right? The option has to only go up. Weird. Same number. The option has to only go up 9% in order to break even off the theta. Does this make sense? Does this make sense? Throw a new thumbs up in the chat if this is making sense. So where I'm getting at with this is that we are reducing our overall theta risk in the trade. And we can show conclusively how much the option price has to go up in order to offset that theta. There, we got it? Cool, right? Cool, right? You wonder if this guy actually trades. I mean,
I love how the plan just keeps improving, and it's only costing me 82 cents a day to watch it happen.
I know. There's Cam right there. But Joe, we're not done yet.
We're
not done yet.
Not done yet. Wow.
We're not done yet. We're not done yet. Joe, would you believe that with a hard limit of 50 cents, that actually could be detrimental between the bid and ask spread?
Really?
Actually could be detrimental, because there are times where that 50-cent spread is bigger than it should be. A huge spread compared to the underlying stock. Let me double check. I don't remember if I put this in my notes over here. If not, that's okay. I can talk through it. Wait for it. Waiting for it to load. There it is. Here we go. Yeah, good. Oh, I didn't talk about open interest either. Okay. So let's go back to open interest and then we'll come back to the bid-ask spread. So this is what we are going to change based on what Lex said. I am looking for A, monthly contracts, which is going to make this a lot easier. And B, I want to see at least 3 figures of open interest all the way down from the strike that I choose. So if I choose this one, I'm not going to trade that one. Now, granted, all things held equal, right? I'm not going to trade that one because I want to see at least 200 open interest, at least 200 open interest, which is different from 250. Okay. At least 200 open interest. And then it needs to be a big number, 3 digits or more all the way down. Perfect examples right here. Okay. And if we go out to April, right? I wouldn't trade this one or this one or this one, but I could take this one because that one and everything else has liquidity all the way down. Is that making sense, Joe?
Yep, absolutely.
Because having that more liquidity is going to allow me to roll easier, right? That's exactly what we're looking for. So
and that's definitely something I've ran into. Some of the contracts I got into, I just had nowhere to go. I couldn't roll. There was no liquidity underneath me, so I was stuck.
No liquidity underneath you is not going to be a problem anymore. Now, let's go to one that we traded recently, like NEM. We did a lot of rolling on that, right? We could go with the March. Bro, you got liquidity for days over here. No issues. Anywhere you want to go. What about KGC? Okay, I would take this one or down. Do you see the difference there? Right? All the liquidity versus 200 plus and down. We're good. We're golden. What about OR? We're golden like Cam. Hey, like that. Or I wouldn't take this one. I wouldn't take this one. What about in February? It could in February, though. I mean, granted, we're not talking about days to expiration. We're just looking here, right? And then what about over here? Yeah, there you go. I could take this one or anything down. It's not going to be that hard. It's actually going to be really easy. You can look with a quick glance and be like, okay, plenty of liquidity. I'm good. Well, SoFi. SoFi, of course, is going to be the greatest stock in the history of mankind. Yeah. Right. And go basically anywhere all the way down. Now, there will be times occasionally where you're going to see like a ton of liquidity, maybe like 0 or just a couple, and then a ton of liquidity and 0, just a couple, right? Those are new strikes. They haven't had the open interest fill in. And honestly, you can just ignore that because there is so much liquidity right here. It's not a thing, not a thing. But do we still look for the 80 delta? Of course, that didn't change. That didn't change. But we have a little bit of flexibility here, right? Sometimes it might, and we need flexibility, right? Because we don't want to say, I'm only going to take the 80 delta. Because maybe the 70 delta is the one you want. And if you got liquidity, you're good to go. Throw some stocks in the chat. I just want to look at them with you real quick. How about silver, SLV? Looking for random stocks in the chat. Totally all the open interest you could ever look at. Apple's too big. I'm looking for like not the most obvious stocks out there. Like Wolf. I'll take it. Thank you, Bruno Mars. Bruno Mars is here?
Whoa.
I know. So like you could take anything from here down. Perfect. What about Mo, which is a cigarette maker? Who's that cigarette maker? Philip Conoco. Oh, no, not Conoco Phillips. Philip Morris. Yeah. You could take it from here and down. Elliot. That's my son's name. EIOT. That isn't anything. But he meant riot. Okay. So looking at this, right? Probably could go here and down. Again, this is a perfect example, right? You've got zeros, you've got 19s, but everything around it really is filled in. Really is filled in. Oh, PM is Philip Morris. What was Mo? I forget. Hang on, it's going to drive me crazy if I don't look at Mo. What is it? Altria Group. That's one of those where it's like, Altria Group, what the hell is that? Yeah, okay. So, Philip Morris's PM, Altria's Mo. Sorry, Mr. Pickle Bohemian Boy. Thank you for that. Wait, weren't you Outlier McDuck the other day? You're not a pickle. You're a McDuck liquor, right? What happened to Outlier McDuck? I like that name way better. Okay, so that's the plan for the open interest. Okay, but we're not done yet. We got to talk about the bid and ask spreads. Joe, we have so much to do. In fact, I would encourage people who's watching this, live or replay, that if you're learning something, or if you're as excited as I am to have these new rules that are going to help us reduce risk, save time, make money, and start winning with less risk, maybe you should put hashtag outlier in the chat. Maybe you should put hashtag outlier in the chat because you know what, Joe? I think we should give away some stuff. I think we should give away some stuff. I think I'm going to do a quick giveaway for those who have already put hashtag outlier in the chat. And you know what? If you haven't done so already, you can see that it's like climbing quickly. If you haven't done so already, now's your chance. Who's going to be our first winner? Who's going to be our first winner? First winner is Laura.
All right.
I've seen Laura before. She's won before. Laura, congratulations to you. Laura is the first ever winning recipient of our brand new Outlier All Over collection, modeled by Carlos. Modeled by Carlos, our Outlier All Over collection. This collection is a bunch of itty bitty baby logos all stacked together to make these fun patterns. Let's just zoom in on Carlos real quick and check it out. Look at this. Ooh, doesn't Carlos look great? Look at that smile. He's so happy. Look at that. This dude's like, man, I know how to save time, make money, start winning with less risk right there. Ooh, and I got a handsome shirt to go along with it. Laura says this is her first time. Well, even better, Laura, because you are about to win something from this collection. We're doing giveaways only of the Outlier All Over collections today. So let's see what Laura wins. Let's see what Laura wins.
She doesn't get to win Carlos?
You know what? Maybe Carlos gets to win a day with Laura.
There you go.
There you go. An all over button down gray shirt. Congratulations, Laura. I hope you enjoy that shirt. You are our first ever winner of the Outlier All Over collection. Let's go check out that shirt. I ordered some of these shirts for myself to check them out. Ooh, look at that. That is one good looking shirt. I love these kind of shirts, Joe. I wear these shirts very frequently here in Texas. This is kind of my walking around outfit, my friend. So I'm very excited about that. Now, let's go back to talking about the trading rules. And don't worry, we're going to give away even more stuff in just a little bit. I've legit watched hundreds of people win merch. My day will come. Not today, Mike. Not today. I will make sure that if Mike and his cat sitting in the sun decide to win, nope, it will be over. Hey, Laura's husband's going to wear it, and he's going to look great. He's going to look like he saved time, make money, start winning with less risk for only 82 cents a day. Okay, let's continue on. The bid and ask spread is so big, we got to move Joe's head out of the way. The bid ask spread with a max of 10% wide. Hang on. Make this a little bit easier for you, Joe. I don't want to take Joe off the screen. Joe's a big push for this. There we go.
I'm back.
He's back. The bid ask spread with a max of 10% wide, and then no more hard cap of 50 cents. No more hard cap of 50 cents. Which means, Joe, New bid-ask spread rules will allow us to take new trades that would have previously been excluded, which could lead to more overall trades. Now, this I'm excited about. This I'm excited about, right? Because like let's go take a look at a stock like Tesla, right? Maybe the bid and ask spread here is pretty wide, but let's do the calculation here. So let's go for like these are decently close together. Let's go for like this one here. So for example, if I were to take this one, the difference between the bid and the ask, which is moving a lot, but let's say 81.60 minus 80.75 is greater than 50 cents. Joe, I can't take that. That's the old Chris. The new Chris says, you know what? 85 cents on an $81 option, that's only 1% of the width. So consider this. If you bought on the ask and sold on the bid, that is the worst case scenario, right? In this case here, if I bought on the ask and sold on the bid, I'm only going to lose 1%. That is not that bad.
No.
I think that's okay.
Let's do another one. Let's do this calculation a couple times.
I saw one, who suggested it? Mark Outlier University graduate suggested WDC. Let's go to that, WDC. Pretty wide spreads. Let's go for like, okay, let's use our new liquidity standards. Everywhere. Sounds good. Okay. So now 80 delta. Ooh, this is wide. This is super wide. Good example there, Mark. Let's say that I went with the 80 delta. 64.45 minus 59.15. That's $5.30. But if it's a $64 option, that's only 8% wide. You know what, Joe?
Mm-hmm.
You could probably get filled somewhere in the middle.
Yeah, you could.
Probably get filled somewhere in the middle. So this is our new bid-ask spread rule. 10% wide at the max. If it's 10.0.001, it's over. No, not taking it. But 10% wide with no more fixed cap. So I'm very excited about this. And you know where a lot of this came from?
Where?
Cam and Lex. I love smart people. And they had some great ideas that we used. Limit orders only. Yes, David, exactly. Limit orders only. They had some great ideas that we can implement right away.
Very cool.
Hang on. Ask times 0.9 is faster. Would we get to the same number here? 64.45. I mean, he could be right. 64.45 times 0.9 gives me 58. Oh, I see what he's saying. That would be like the bottom limit. Okay, sure. There's definitely more than one way to skin the cat right here. Bid minus the ask divided by ask. Exactly. That's your worst case scenario. Or I'm sorry, ask minus the bid divided by ask. Yeah, that is your worst case scenario. So yeah, I'm very excited about this. Multiple reasons. A, more liquidity. B, less theta risk. C, more trades. Right? And we have the math to back this up. And again, if you want to double check my math, by all means, link down below is this exact spreadsheet. Go to the rolling calculator tab. You're going to see exactly this right here. You can save a copy for yourself, and then you can play with it all you want. Who's winning again? I'm just going to go straight to winners. Straight to winners, Joe.
I want to win. Come on.
D2 LNB. Let's see what D2 LNB has won. Our second ever winner of Outlier All Over merch. Let's see what D2 DNB has won. We need an ad break for Upwork real quick, though. That's the only way this works. Outlier All Over polo shirt, light blue. That's the one I ordered. The Outlier polo shirt, all over light blue. All right. Let's go take a look at Carlos modeling the Outlier polo shirt all over light blue. Let's go look at that real quick. And then we're going to give away even more. There's Carlos. He's so happy. He's like, man, for like 82 cents a day, my life is entirely changed. Ooh, look at that, Joe. Oh, does that not look gorgeous, everybody? Oh, awesome. My gosh. Oh, my good gravy. That looks so good.
I can't wait to get a splotch of mustard right down the front of that when I buy it.
Yep, that's usually how it goes, right? Okay. So how about we now talk about the weekly winner circle? So this week there were how many winners this week? Equals this plus one. There were 30 winners this week, and we give away one prize for every 20 people. So we're going to give away 2 prizes here. Dr. J's in the mix. Senior Wahoo's in the mix. I saw Rick Warfish up here. Is this Frank who's going to pay for everybody's lifetime subscriptions? Frank's in the mix over here. Let's see what hey, there's Shane the plumber. Let's see what Shane's talking about. Shane, by the way, you're disqualified from winning. I'm just sorry to tell you that, dude. Because you're part of the Outlier team, you can't win. 292.83% return on capital on Nvidia since Thursday.
What?
He's up 47% on the year, and it's by far his largest positive return since starting with Outlier. That is not normal. Holy goodness.
That's incredible.
That's gonna have to deserve a little like not normal thing. Not normal. That is definitely not normal, my friend. That is amazing. Congratulations, Shane. All right. Let's see. Who else? There's Shane from Outlier University. There's Dragon D's Nuts. I like that. That's funny. There's TubeSock25. Let's see what TubeSock25. Joe's lost it.
I love our audience.
TubeSock. I know. Our community is so fun. TubeSock closed silver. Open November 11th, following the Outlier buy signal. It rolled 22 times. It went up 49 ATRs from his opening price. Holy goodness.
Oh my.
A 267% gain. It paid for 100 years of Outlier. Huge thanks to the entire Outlier team. I guess he made more than 82 cents a day. I'm just saying. Wow.
I'm jealous because I love rolling. It makes my day when I can roll an option contract.
Dude, that is bonkers. 49 ATRs. That is unbelievable. Congratulations. So here's what we're going to do. We are going to give away 2 prizes to 2 people picked at random from the best website on the internet, random.org. And we go up to number 30. So an upper bound of 30. Let's see who the first winner is. These folks can buy their own merch. Number 16 is Hockey Rink. All right, Hockey Rink. I've seen your name around here before, Hockey Rink. I can double check. The only rule here is you can't win 2 weeks in a row. Hockey Rink did not win last week, so Hockey Rink gets to win something over here. Let's see. Hockey Rink says, booyah! An all over polo shirt with the gray color. We got to see Carlos modeling the gray color real quick. We got to see Carlos modeling that gray color. All
you
right,
got a man crush there, Chris? Are you trying to tell us something?
What?
You got a man crush on Carlos?
On Carlos?
Yeah.
I mean, everybody got to have a hobby, right? Yeah, everybody got to have a hobby. All right, check out this. I think this looks absolutely nice. I love it so much. I can't wait to get my own shirt. So that way Hockey Rink and I can match. And then we'll go out like clubbing with Carlos, right? And clubbing at my age is sitting at the bar drinking, making sure nobody bothers me. That's clubbing.
Look at the stitching on that collar, though. It looks awesome.
Dude, doesn't it? And it matches cool. Carlos's long flowing locks. Gosh, way to make it weird, Joe. Hey, how about we just look for the next winner?
Some call it a hobby and some call it sus.
Yep. By the way, the nature of randomness landed on Hockey Rink for a second time. Legit, that can and did just happen. Unfortunately, you don't get to win twice, my friend. Sorry, dude. Number 24. Number 24 is Chris in Wisconsin. He's not going to be able to wear these for very often because they're not very warm. But let's just see exactly what Chris in Wisconsin's won.
Maybe he'll win the sweatshirt, the hoodie.
That's a great point. Hoodies are on here.
So close.
So close to a hoodie. But he got the all-over print mug navy.
Nice.
All-over print mug navy. Let's go check those out real quick. And for those who didn't win today, that's okay. Remember, everything in the Outlier store is at the absolute lowest price that we are allowed to do it. And then go to checkout, do Outlier, OVTLYR. Then it's cost plus 8%, which we've hacked their mainframes in order to do this. So there you go. All over mug. Actually looks pretty sick. I think I'm going to get one of these too. I think even girls would like this. Oh,
yeah.
There's not many girls around here, but I think my wife would drink out of that. I think my wife would drink out of that. You know what? Let's do another giveaway over here for the people who are here live. Let's see who's here live. And put hashtag Outlier in the chat. Charles, hang on. You know I'm going to screw this up real hard, Joe. All right, Charles Sand, or Charles and T 4757 or 47. Yes, so his droid is named T 4756, like C3PO T 4756, and so Charles with two S's and his droid T 4756 have both won. Let's see what Charles and his droid T 4756 have won today. Let's see what Charles and his droid have won. Let's see. But Charles is in charge. That's right. Charles is in charge.
Here comes a hoodie. Oh, yeah.
Oh, yeah. Here we go. Outlier print hoodie. Charles and T4756. Here we go. No, it's Charles. Like, does he grill? Is that what it is? So he chars things less? That's a good idea.
He's making brisket voices.
Dude, I had brisket for lunch. I'm just saying. Here in Texas. Yeah. That's part of our culture here in Texas, my friend. We're walking up to HEB, also part of the culture here in Texas. And my kids are out of school today, and they're like, "Smells like pollution." And I was like, "No. That smells like freedom in Texas, my friend. That is not pollution. It's just natural wood burning."
As your gun jabs you in your hip.
That's what God intended. Okay, let's go check out the all over print hoodie navy. All over print hoodie navy. This one right here. Here we go. Oh, dang. That looks so good. It'd look better if Carlos was modeling it, but it looks good right there, doesn't it? Hey, Joe, you walked me into this joke. I'm going to milk it. All right. You walked me into it. I'm going to milk it. That looks great. That looks great. I love it.
Whoa. Wait. You don't know what brisket is? Oh, man. I feel bad now. You've got to have brisket.
Oh, man. My brisket recipe is somewhere on Discord. And as a full-blooded, born and raised, and until I die Texan, like, this is part of our culture here, right? Is everybody has smokers, everybody's got briskets. So yeah, I mean, it's probably not everywhere like that, obviously, but yeah, here it is. So yeah, how about that? That is one good looking hoodie. So congratulations to Charles and his droid. I don't think his droid will fit well in the hoodie. But you know what? I bet Charles will. Joe, this has been a lot of fun today. We covered so much today. We covered an unbelievable amount of stuff today. We talked about how the market's crashing. Everybody needs to panic and freak out. We talked about new trading rules. We talked about brisket, talked about Carlos. What else did we talk about? It was a good day.
We even have a pro tip from eCar04.
What's
up?
Pro tip.
Sorry, I had to push the button.
Eric is using limit orders and some patience. He's not jumping in, not paying the ask price. He's getting great fills. Good job.
There you go. All right. Congratulations to all of our winners today. And congratulations to Outliers for stepping aside as the market is crashing down to zero. This is going to be Black Monday. Just be ready for it, right? Watch for the market to open down 7,000 points. I mean, the S&P is just under 7,000 now. It's going to go down 7,000. The S&P is going to open up somewhere around like negative 200. That's what it's going to be. Like the entire world economy is going to shut down on Monday. Just, that's how it goes, right?
You're right. We do need to mention Guinness. Now we've done it. We can conclude.
Dude, if we could get sponsored by Guinness.
Oh, wow.
I would never be sober. It would be great.
That would be pretty handy. Yeah.
I would need a new liver. Oh, you're right. Thank you. I completely forgot about that. The market's closed on Monday.
Mm-hmm.
Black Tuesday it is. It is. It's going to be the worst stock market day in history. Now, Joe, what's great about this is I can be like, I can pull the whole fake YouTube guru thing, right? The market's going to crash on Monday, but I already sold out all of my positions.
Yeah. Yep.
I win both ways. So either it goes down or it goes up. It doesn't matter. I sold out all my positions. But Black Tuesday, by SoFi. Exactly.
That's right.
Black Tuesday. That's right. So there will be no shows on Monday. That's correct. That's true. You guys get the day off. I get the day off. Joe, you still got to work, but everybody else gets the day off.
Yeah.
Joe, if somebody were looking to save time, make money, and start winning with less risk, what do you think they should do?
They should go to outlier.com and check out trial membership, or jump right into being a subscriber like I did, because they're going to find out this tool is fantastic for 82 cents a day. And then they can watch one of these videos right here.
82 cents a day. What a deal. You guys have a fantastic day. Thanks for hanging out with us. Have a great weekend. I'll see you back here on Monday.